Good morning, everyone, and welcome to the Quantum Leap Morning Leap for Wednesday, February the 3rd, 2016. My name is Doug McKay. I'm the founder and head moderator of Quantum Leap. Each morning we get together in one of these live sessions to go through and take a look at the market, macro to micro, look at the structure of the market, then drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room. We do these live morning sessions, and then we do live trading and live analysis during the course of the day. If you'd like to come in and try us out, I'll put my contact information up in just 1 second. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you do want to get a hold of me, just send me an email at quantumleapfutures@gmail.com. Unfortunately, there's no website, no blog. This is all done live. I'm not doing this for commercial gain. We're doing this to help traders and to share information and hone our skills. You can give me a call, 647-545-8065. I love talking about the market. Also, if you will need a Skype account. It's easy to open, it's free, and you can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. There's over 300 videos of these pre-market trade plans on YouTube. You can do a search under Quantum Leap Futures and take a look at our past performance and what we do every day before the market opens. And then if you like what I do, please follow me on Twitter at Crazy2. Okay, so yesterday our main hypothesis was basically centered around the 1908.50 and whether or not we could hold above that 1908.50 and then rotate into the prior day range and test into the value and get back into value. But if we couldn't hold above the 1908, then I was looking for my main hypothesis as a rotational day with a move down towards and target that 1890 microcomposite VPOC that we had accepted value. I'll bring it up on the big picture chart in just a minute. So I mean, we basically had an open drive and took out the overnight low, and then they got below the 1908, 1909 area, and other than these two times where they tried to get back above, we basically stayed below that, and then we just grinded our way down. It was kind of tough trading in this area right here. I finally got the short below 1900 at 1899.75, and I was able to hold a runner all the way down to 90 1/4. So it turned out I had a decent day, ended up with 30 points on the day. And then we rallied off of that 1889 and then came up and we closed just back inside of developing value and closed at 1897 1/4. So each morning I do like to start my day with a basic routine. I start with a candlestick chart and a 9 EMA and a 20 SMA. I start on the monthly, and I want to look at where we are within the trends. I'm looking to see where the different time frames are. Are we rolling over? Is the trend being challenged? Is it being strengthened on all the different time frames? You can see that we've had this wonderful, bullish market, great trend, great slope and separation, and then we've started to violate and challenge the trend, and currently right now we're below the 9 and the 20, and we're currently in the middle, lower distribution of last month, and we are getting a rollover. This is, however, a possible foobar, Mr. Sneaky. For those that don't know what that means, it's a possible retracement pattern, but it is on the monthly. We have to pay attention to the time frames. The overall trend on the monthly has been violated, and we are moving down. On the weekly, we do have slope and separation. We did create this technical gap. We are coming and trying to close this technical gap. A gap close will bring us back up into that 1950 area. Remember, we have that inverted head and shoulders that's still in play from the 4-hour chart that we posted a week ago with the target up in the 1960s. So, we are coming up to close this gap, and we could get continuation. But the trend itself is to the downside. We can very much come up here or come up here and fail again. On the daily, you can see that we are in a consolidation pattern. There is a potential. It's not real clean, but there is a potential cup and handle here setting up on the daily. I just want to take a quick look at it and see if it even the only thing I don't like about it is this tail right here. I'm going to measure it from here. So it does set up right now as a valid pattern. Let's just see what the extension calls for. And again, I'm just discounting this move down to 1804 because it happened in a single day. And the main target there is, believe it or not, 2008.52. That's interesting. Again, patterns are just patterns. Trade the structure. Look at the patterns as possible destination points. But it is interesting. But overall, we've got consolidation going on right now at the on the daily. We did have a nice strong trend, good slope and separation. They challenged it, they violated it. Now we're coming back and testing it. We could fail from here and get continuation, or they can continue to change the trend and start moving up. Going into the 4-hour. The 4-hour, we've got challenge of the trend on the 4-hour to the downside. There is a naked cross that looks like we're just taking it out now. There's a naked cross that we created on the move down yesterday, and we just took it out. These naked crosses is when the 9 crosses over the 20 and price action moves away. They don't get left alone. You can go back and test it all you want. They will eventually come back. It's like a naked Deepak or gap. They'll come back and they'll close that. So we just closed that. We are starting to get some separation, but I would say this is more consolidation in this area. Going to the 1-hour, again, just consolidation. Going to the 30-minute, we are starting a trend to the upside. We've got slope and separation. They've challenged the 20 several times and seem to be holding it. There's not a lot of naked crosses above us. There are a couple on the 15-minute. There again, trend has been the downward trend has been violated, and we're getting into a possible upward trend. I was paying attention to this, but this got taken out. There's one right here, up here at 1921 on the 15-minute, and there's one right here up at 1928. So mark those two as possible destinations targets today. And going down, but the trend is starting to the upside. And then on the 5-minute, you can see that we are getting a trend to the upside, and price is paralleling the 9 quite nicely. A little bit of a technical gap, but not too bad. We do have a naked cross below us at 1901.50, so mark that down. And then there's one up there. No, it was taken out, so I don't have to worry about it. So the overall time frame coming into the RTH session, the regular trading hours, is a start of a possible upward trend, but it's on the smallest time frame. All the other time frames are in consolidation and movement or change. Looking at the news today, we had obviously the move up this morning. We had ADP I traded it. I got a little bit of it before I had to get in here. But they came out 205 versus 193 expected. So, but it wasn't as good as the last time. Last was 267. But it did give us enough of a push to get us into the 1900s and move up into that rule of 10 in the 1910. The 9:45, 15 minutes after the RTH opens, we have final services PMI, but the big one will be ISM manufacturing PMI, and then of course crude. Crude been a leader in the market, so we've got a fair amount of news coming up in the first hour of trading. So just be careful out there. Don't need this. This is just our trades from yesterday. So let's take a look at the big picture. So, and I don't, I harp on this because, I want people to understand the logic between the profile. We were in this area. We had fallen out of balance around here, where the most traded price, the microcomposite VPOC, was up here at the 1960 area. It was prior from a previous period at 1550. We were targeting the 1550 because we had the gap there as well. And then we fell out of balance and we came down. We couldn't hold here. We couldn't hold here. And they finally came all the way down to a previous price acceptance at 11, found the buyers, then buyers stepped in, strong buying tail, came in, held accepted value back up here, came back up here, accepted value around the 1890, and then just before they broke out of the current microcomposite that centered around the 1890, they accepted value here at 1885 and a quarter. And then they popped up. They came up. Where did they come up? Right up into the 16 area. Test the other side of balance. Test the value area high. Reject the value area high and the other side of balance. And they come back down. Okay, they try to hold here at 1906. They couldn't hold. What do? They come right back down to the 1890, bounce off of that. Now, overnight, look at where our low is from overnight. We came right back down to the last price that we accepted before we broke out of value down at the 1885 area. Our low overnight is 1885.50. They've bounced off of that, rotated up, and now we're coming back up and we're rotating and trying to hold value here in around the 1906, and we're testing the 975. I mean, it's very clear if you just don't overcomplicate it. Okay, we're going to look for buyers below in areas they found value before or accepted value before, and we are going to go up and we're going to seek sellers from where we tried to hold value or found value before. If you could just take that one thing and put that into your trading and put that into your mindset, you'd be 10 times better trader because you'd understand why we're making the moves and where those possible destination points are. So currently we are, we're back out of the value here. The value area high for that 9-day microcomposite is here at 98, and we're back up and around the 3-day microcomposite at 1906. I still think we're going to get a rotational day. I don't know if it's going to be up or down. The warning line to the downside is going to be 1903.75. The line in the sand is going to be the 1997. We come back down to 1997. We're likely to take a trip down here. This whole area between 41 and basically 70 is very blunt. I could basically draw a line down here and get hit by multiple undetermined fair value or composite high volume nodes. Okay, so what they're trying to do is mature the auction in these areas to determine what really is fair price between the buyers and sellers. And right now we've got a lot of undetermined fair value, therefore that means chop. Okay, and I'm going to be using 975 again today for, above it. I'm looking for them to push through to test the range high from yesterday and possibly get into this wick up here and chop around in this upper distribution between 33 and 975. If we fail to get above 975 and we break below the 375, then I'm looking for the gap close and a rotation and chop in this area between the 8150 and the 903. There's not much more you can define out of this because of the fact that we are in this blunt area of the profile. We've got to go to a smaller time frame and trade in the smaller time frame with expectations that we're going to get a lot of rotations, and those rotations could be big, they could be violent, and we've got to protect our risk. So let's take a look at what we've done overnight. So as I mentioned, overnight we came down to that 1885. We opened up inside of yesterday's value and range, and then we couldn't get back inside it. They rejected it, and they came down, and they tested all the way down to that former microcomposite VPOC that we just accepted before we broke up into this price discovery and found buyers. And then they rotated it all the way back up, to where? That 975 area. They rejected at 875. Sellers stepped in, said, no, we're not ready. We want to come back and test this area down below, chopped around, okay, this 1900. Our overnight VPOC is 1899 and a quarter. And then finally, they ran out of inventory. The sellers ran out of inventory, and the buyers took over. And what did they do? They take us right back up, where again, to the 975, where we failed again. And now we're balancing, okay, around the current microcomposite VPOC, the 3-day most accepted price, which is at that 1906 area. So our overnight low is down at 85.50, which is 2 ticks below the naked VPOC from Thursday. I think it's Thursday. And our overnight high is 875. Or did they put a new high in? I got to check that. 950, they did. 950. Now, they've been doing this a lot lately, is they've been going in and putting in a new high in the last half hour of the Globex session. So we're close enough that we could go and put a new high. But this 1950 is right at the value area high and our key line in the sand above right now, which is the 1909.75. So this is going to be a trade area, but more specifically, it's going to be our key line in the sand above. Because if we get above there, I'm expecting for them to try to go and hit that 15 area again. And the first area, well, let me get the information I need from here first. Our overnight VPOC is 1899 and a quarter. And there's no real significant LVNs that I'm really looking. There's one at 1900, but we know that. There's the 375, but we know that. So there's no real other information. Well, there's one right here at 89 or 1890, but that's our microcomposite VPOC, former VPOC. So there's no real information I need from there. So let's bring this down. So we've got, let's do the upside first. So we've got the key line in the sand, that is right at our value area high and right near our overnight high. So I'm expecting this to get tested this morning at some point in time. Take out the overnight high, test the key line in the sand, test the value area, test the CLVN. If we break above, the target I'm looking at above is going to be this 1175. And then obviously I'm looking for them to get continuation up into this 14 area and test the range high. And then above the 14, the first target above range and above value, again, it's 1550. We've had that multiple times in the last while. And then a little bit of resistance coming in at 18, and then above 18, targeting 20, resistance at 2175. And then above there, 24. I'm going to shift the 2175 up to 2250, simply because that's the value area high for the 3 days. But I wouldn't want to short until I'm below the 2175. And then above there, I wouldn't be trying to short this area. I'd be looking for them to make a move up. There's not much to hold us down up here. I'd be looking for a move up into the 35. But the big targets right now is going to be the monthly open and the gap at 30 and the 31, and what is going to be our next key line in the sand is going to be the 33. It's really 41, but 33 is going to be a warning sign for me. The reason I'm saying that 33 can be a key line in the sand is our daily ATR is just above it. Based on our daily 20-day ATR, that is running at 48.50 off of that 85.50 overnight low. Our daily upside target is up here at 34. I do have to adjust the downside daily target, which is down here because we just put in a new high at, what was the new overnight high? What did I just say? I just put it on my chart. Overnight high 950. So 1909.50 minus the 48.50 adjusts to 1861. It was 1860 and a quarter. And 61 and a quarter is a gap. I'm going to put this to the back so we can still see that gap. All right, so those are my targets to the upside. If we get above the 34, I'm looking for them to go test that 41 again. Remember, our range high from the other day was up here at 1940. And above 41, you've got 47 and a quarter, 49, 52. Our inverted head and shoulder is, target is still up here at 62. And then our weekly key line in the sand off of that low that we put in, well, I think I have to adjust that. So our weekly low is now the overnight low, right? So 1885.50. Our weekly ATR upside rate, our 20 period weekly ATR is 74.54. So that takes us down to 1960. All right. So those are, you know, I'm not expecting to get up there today, but those are my upside targets. We do have range, though, to get up into the 34. To the downside, did we just put in a new overnight low? People are talking to me. I can't see them and do this at the same time. I'm sorry, did we go put in a new overnight high? Not yet, but we're coming up there. Okay. Is there something going on that I should know about? I hear a bunch of... Hold on a second. I'll be just going to check some messages here. Make sure I'm not missing something. Okay. So, to the downside. Obviously, we're going to be opening up in this distribution. We're going to open up in range and in value. Look, they're going to put a new high in just as we're doing this. I hate when they do that. So we're likely going to come up and test this area. Inside of value, the first target below is our change percentage of range price, which is at 1908. Then I'm targeting 07, and then obviously the takeout of the naked VPOC. And then below that, we have, you know, the floor pivot at 05, the FOMC number, and then I'm going to use the 375 just below that. I was using it yesterday. I'm going to use it again, and then, you know, for a move down, and then it'll be a target and a trade area at the LVN from the in between the two distribution points. It's also the VWAP and the midpoint. So it's you know, basically surrounding the 1900. Below that, obviously the target is going to be the 97 and a quarter. You know, we have an LVN at 97.75. I don't think it's going to, you know, be that important because of the fact that we've got the gap and the value area low below us. So I'm actually going to be using it as a target, the gap fill, and then using the 86 and a quarter. And yeah, I see we're putting in a new high. I'm going to have to adjust that. And then below there, you got to be targeting the 90 area again. And I'm going to use 91 and a quarter just because we've got a little CLVN, then 89. And then below that, the main target below the range and below value is going to be back down at the overnight low, take out the naked VPOC, and come down into this microcomposite VPOC again at 85. And then below that, we've got the gap fill and the CLVN down here at 8150. And we're going to target that. And then support comes in around the 78, 75, just below it. And if we don't bounce there, then I'd be looking for them to come down to the 74.50. And these numbers are, you know them. And then the next key line in the sand is the 70. Below 70, I think we make a bigger move down and take out our weekly downside ATR target. We do have range to do it today down to the 61 area. And then, below the 61, you've got 57.50. But I really be looking for them to come down to the key support, and that's this area right here, below the 48.75. I think it's the move up, the intermittent move up or intermediate move up is over, and we get a bigger move down, back down towards the 1800, lower 1800s. I don't think it's going to happen today. I think we're going to get rotation. So what did we do here? How high did we go? We went to what? 1050 now. They weren't able to hold it, and they're back inside, so that's interesting to note. Okay, so that's what I'm looking at. My main hypothesis, like I said, if we if we just pop up and reject or even come up into the 14 and then come back into value, I'm looking for a rotation down towards the 85. If we get above value and above the key line in the sand at 909, I'm looking for a slow rotation grind back up towards that 15 area and continuation, possibly up to test this 31 area again. I think we're going to get stuck somewhere in here in this distribution zone or stuck somewhere here in this distribution zone. I'm expecting a lot of rotation today, um, especially with news. Okay, quickly, let's look at gold. I know we're running out of time. Gold continues to hold. We're still battling this 29 area. We're just chopping. I'm going to just put a little bit of a smaller profile because this could be where they accept price before they break out of this distribution zone. So I'm just going to go here, see where that value is. So 1127 is the 3-day. And if we accept that, then break out of this 29, I think the next push up will get up a move up into the 36. The next big destination point is the 65, 70, 66 area. And of course, my main hypothesis for the year is a slow grind back up towards hitting this 1250 at some point in time in 2016. If we get back below the 29 area, or we can't get above it, look for them to come back into the 27 and test this 24. Below 24, look for the bigger move back down into the current microcomposite VPOC down here at the 1116, 1117 area. Anything below 11, 1111, we break out of value, we break below that distribution zone, look for them to come down, test the lower distribution and the CHVN at 1106. And if we don't bounce from there, all the way back down into this area between 1102 and 1100. And then below 1100 down into the 94. The key line for me is into the 60s. I don't, it wouldn't be anything for us to come back and retest this area down here before we continue up. But anything below this 11 or 1060 area, we fall off. There's nothing to hold us up. I'm looking for a bigger move down. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.